All right. We are back for another Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing awesome, man. Thanks for doing with me each week. I have a lot of fun.
This is awesome. I love it. This is for the week of October 20th, 2023. Hard to believe we're already in the kind of the last third of October. Let's get right into it. 8% mortgage rates, crazy mortgage market that we've had this year, 2023. What are your thoughts this week about mortgage rates?
Well, it happened. I got a note from Lance Lambert the other day, Resi Club, that we're now at 8% mortgage rates. That we haven't seen this, I think, since 2000, something like that. It's significant. I mean, 8% mortgage rates. I mean, we're getting to a point, frankly, Ty, where I will not be able to say that 1981 is the most unaffordable market. We're knocking on the door, right? The year's not over, so we'll see. But there's a chance that 2023 goes down as the least affordable market in the last 53 years. There's a chance. It's wild.
Absolutely wild. We've been talking about this for months, weeks, especially the last few weeks. And so we are here and it's a very interesting time. Let's talk about existing home sales. What did you see this week and just kind of your thoughts on where we're trending to?
Well, it's going the direction that we called on this channel, one rental at a time. Uh, the cycle low was in January at 4.02 million. A lot of the real estate executives thought that 4 million was like the bar that we would not cross. I kept telling them, you're wrong. And we did. We crossed it for September data at 3.96 million. And as we'll talk about in a minute, I think we go lower. I
Yeah.
don't think we have found the bottom just yet in transactions. What's really interesting, again, because everybody equates housing to a pricing crash, while we set a new cycle low for transactions, 3.96, prices, median, went up 2.2% year on year.
Yeah.
Um, some people just don't understand how this supply demand curve works, but we've been right all year. And transactions are going lower. Prices are going to be pretty flat, I think.
Absolutely. We talked about, and I want to just go back in some show notes in that in the playlist you and I did last week, or no, the beginning of the week this week, we did a Back to the Future comparing
Yeah.
23 to the 1980s. Maybe just comment a little bit about what we did in that video and what talking about where we're at affordability and existing home sales.
Yeah, folks, what you got to remember is even if it's the most unaffordable market ever, and again, 2023 might be the most ever, you can still create deals, right? We did a Back to the Future discussion. I just interviewed somebody who started investing in 1981,
Yep.
right? 1981 is a horrible market, but the idea was you found a way to do a creative deal. The deal is you found a motivated seller. Some folks have to sell. If you have a property listed at 8% mortgage rates, there's a good chance you have to sell. So there's a deal there. And I just talked to a mortgage broker today, um, where think about this, Ty. What if I told you you could pay the seller's price, you could get a rate in the fives, and you could buy it with 10% down? Would you be interested?
Absolutely.
There is a product that Stephen Dow from Velocity Mortgage has called 90% CLTV, buying loan to value. All you have to do is find a seller with equity, give them 50% loan from Velocity at 9%, get the seller to take back 40% at 1 or 2, and bring 10% to the table. Congratulations. You paid the seller price. You got a blended interest rate in the fives, and you only brought 10% down. Folks, get off your ass and do the freaking work. There are great deals to be had if you find a motivated seller. The 1980s proved it. Uh, Investors like Ty and I will prove it again. Opportunities are out there. Get out of your head. Have a mindset that it is possible, and you'll find them.
One 100% spot on, Michael, as always. It's funny because prior to this recording, I actually just recorded 5 shorts for Instagram, all based on motivated sellers, where to find them, how to find them, all of that that'll be posted here in the next couple of weeks over IG. So let's continue and let's talk about the winter deep freeze. Obviously, it's still very warm here in California. What do you mean by deep freeze here in the winter?
So I think again we're going to repeat Q4 of last year, and if you were in the business, you know that transactions basically locked up. We're going to be doing that again. It is really interesting to see the similarities between last Q4 and this Q4 because we hit cycle high in interest rates
Yep.
in the slowest part of the season, which we are doing again right now. Winter is the slowest. So I would expect to see cancellations. I would expect to see withdrawals because again, it's gonna get slow, and we're gonna go lower than 3.96 million. The deep freeze, I think we might see as low as 3.8 million, 3.75, 3.8, somewhere around there. So not much lower, but we're going lower in this deep freeze, I think.
And I want to say spot on in that also too. I want to just the receipts. You said this. I feel like you said this during the summer. I feel like you were talking about this back in June, July, August. For sure. You called 3.75, which seemed outrageous.
Yeah, we were at 4.4
above 4 million.
Yeah, we were at 4.4 when I made that call. I'm like, God, this is like people don't understand how this works. People were in March and April when we were at 4.4, and I'm like, dude, this is not going to happen. We're going sub 4, and it happened. We went sub 4.
Yeah, 100%. And I want to also just note here that in terms of what does that mean? So sub 4 million, 3.7. He's talking about national sales, annualized national sales.
Existing home sales, yes.
Existing home sales, not brand new homes, existing home sales. And to give an idea, in the peak in this last 5 years was like 21 or 22?
6.4 million. I think it was 21, 6.4, something like that.
In 21. Okay. And that was also the lowest point of interest rates as well. So very interesting times that we're in. There's a direct correlation with the rate and what we're seeing happen right now with transactions, correct?
Yep. Yeah, rates matter. But again, what people don't realize, you and I know this, but for the audience, everybody thinks rates hit demand, and it absolutely does. I've already acknowledged this might go down as the most unaffordable market ever. But what everybody missed, except us, was it hit supply.
Yep.
And what people really got surprised by is it hit supply more than demand. Hence, transactions down, price up. We called it. We got it right.
Spot on, 100%. So let's talk about the bottom. I have a show note here at the bottom. What are you talking about, Michael? What's the bottom?
So I hope this is received as good news, but I don't know. I think 3.8, 3.75 will be the bottom for transactions. The reason I think the bottom is important is because anything I've ever done over the last, 30 years of studying things, you can't have a comeback until you have a bottom. So we can't be talking about a comeback in existing home sales until we have a bottom. So I believe the bottom will be sometime between today and February of 2024. And I think that's a good thing. If you are running a business that is profitable, cash flow profitable in the next 4 or 5 months, you're going to be set up for the comeback. Now, I don't think the comeback is quick, but again, if we get down to 3.8 million and we go up 5%, for some people, that's going to feel like game changing. Like, oh my God, it's changed. So I see the bottom between now and February of 24. And to me, that's a good thing. That's a great thing. We can start making moves after that. So I think it's a great thing.
I would agree. I think this is a great time, for someone new just getting in. What a great time to start.
Yeah, absolutely.
And then even for like realtors and loan officers, transactionally, the volume's been down, but you know what? Get to the other side, keep doing the work, keep executing, get the bits and pieces of business that you can get now and get to the other side. Because again, I would agree wholeheartedly. It definitely, I think in the 1980s, the comparison we did in the video, just looking at that 53-year spreadsheet, it really tells a story. And that, again, I would agree wholeheartedly with you that we are at definitely near a bottom. So let's finish with the Fed pivot. And then as always, we'll talk about where's the opportunity. What is the Fed pivot in your thoughts this week?
Yeah, I think the Fed has clearly made a pivot. And now that's not a cut, but that's a pivot. I believe the Fed has gone from being the big bad wolf saying higher for longer to sitting in a lounge chair. The Fed has come out pretty quickly here and said, the market is doing our job for us. What does that mean? Well, in the last 3 weeks since the Fed meeting, the 10-year treasury is up like 46 basis points. What does that mean? It's basically up 2 Fed rate increases. The Fed is basically saying, whoa, the market is doing our job for us. We're done. We're not raising rates the rest of the year. So that is a Fed pivot. They've gone from being the big bad wolf trying to push the market to sitting in a lounge chair watching what's going on. So the Fed has pivoted, in my opinion.
Good news. Good news. And you've been talking about it. Obviously, there's some world geopolitical wars and things of that nature that obviously are probably affecting this as well. But ultimately, we're moving in the right direction. Would you agree, Mike, or your thoughts there?
Well, again, it's all about getting to the bottom. And in the Fed speak, getting the terminal rate. It's all about getting to the highest or lowest points so that we can plan and execute and move forward. All of this is good news. All of it is painful. I understand. But in hindsight, it will be an inflection point, and I'm encouraged by that.
All good news. And so let's finish on the high note. Opportunity for the one rental at a time community, for the realtors, for people looking to buy their next rental property or their first one rental at a time property. Just some thoughts, some words of encouragement, or where would you see the opportunities as we move forward?
I want to be very clear on this. And I actually had a conversation with Omar on Tuesday of this week. We are only doing great deals.
Yep.
Omar and I talked about a deal that was a good deal. And I told Omar directly, should cancel that deal. There's no room there.
Yep.
You might do a deal like that in an up market, but you wouldn't do it again. If I'm telling Omar, who's done hundreds of transactions, stop doing good deals, I would tell the first time investor, only do great deals. Problem is, most people don't know what a great deal is.
Right.
Because you haven't done the work. You haven't paid the price. You don't have a buy box. You haven't looked every day. You don't know what average is. So do the work, man. Just do the work.
Do the work, folks. If you have time to look at social media in the morning, 10 or 15 minutes, and again, throughout the day in the afternoon, you have the time to do the work, which is what Michael's talking about. The morning, looking at your buy box, looking at the market that you study, same thing in the evening. Michael, last thing, let's finish. You have an event you've hit. Congratulations. For some people that may not know, 50,000 plus subscribers on the channel. Tell them about the event. Tell them about February. Tell them how they can buy tickets.
Yeah, so this is on Eventbrite. There's about 100 tickets left, only 100 tickets. We sold over about 200 of them so far. You're going to come and get to speak with, interact with about 12 people that help build one rental at a time, including Ty, including myself, Omar, Adrian, all these amazing folks that built the channel. And also, you're going to get to interact with upwards of 300 people in the audience who are all doing the work. One rental at a time attracts an audience who is doing the work. I truly believe most people need a better network. Most of you don't have a network of people doing the work, trying to make a better plan. You should go to this event to meet 5 new people and get your 5 new friends, or maybe even best friends. I think the people in the audience will be as impressive as the speakers. And we know who the speakers are. I think the audience is going to be equally impressive. We're going to have a party. We're going to have a concert. We're going to be spending 20 plus hours together. It's a stupid price at $199. I'm doing it as a way to give back and frankly break even. And I'm excited, man. I'm excited.
I'm excited as well, folks. You can go to onerentalatatime.com. You can find the link there. I believe also there'll be a link in the show notes as well to buy tickets, folks. So this will sell out. Again, it's in February. Some people think of February as a mile, is 1,000 miles away. Trust me, it's going to be November, December before you know it. The event will sell out within the next couple weeks, several weeks. So if you're interested, buy your tickets one rental at a time. Michael, thank you for all the work that you do. Thanks for putting this all together. Thank you so much.
Thank you for coming, man. Thank you for being here weekly with me. I appreciate it.